Good afternoon, Scott Rella, T3 Live. It is Thursday. It's the end of the week. It's been a very busy week. As busy as it has been, it's been just as thin, just as quiet, and just as low as volume. Like basically, there are so many spots where there's been activity and there's excitement, and if you happen to be in the wrong ones or the wrong spots, you're definitely being left out, and you're thinking nothing's going on. Today was one of those days where the indices were pretty much flat, and some stocks that have had big moves were in small, tight ranges, and then you had some things moving around. So what you have to do is you have to pretty much control your hands, see where the action is, and try and go where the action is, and not try and be where the action is, or look at where the action is and say, because the action is here, I'm going there. It's hard enough to find out where the actual volume is trading. So if I just said that in French or Spanish or German, I tried to explain it in English. Basically, it's a summer. There's not a heck of a lot going on. Find the action and try and stay there. And if you can't, do less so you don't give away money. Okay. So with all that said, let's go to the SPX because the trend here has been the same. I remember in this range, everyone was a little bit frustrated, and it looked like we were going to correct a few different times. There was lack of follow through in certain areas, and then we wound up breaking out, and then people said, oh, it's going to be a fake breakout, it's never going to continue, and it wound up going above 1902, and you had a really big move before riding the 21-day all the way to where we are now. So during this process, there's always these gut checks. There's these spots where, like here, it looked as if the market was going to break the 21-day. You could have brought risk down. You could have said, I'm going short. This is it. I'm going to be crushing it now. I'm a bear. I've been a bear for 2-3 years. This is my time to shine. And then that happened. It wasn't your time to shine. Hopefully, you covered halfway in, because once a bar gets 50% in, or at least more than a third, you should be switching some gears. Then we held in there again, and then now this is what we've seen the past 3 days. And obviously there's big moves in other places. Question now is, how long do we have a potential ascending channel here that might take us to 2,000? Every time we get these ascending channels, they wind up going until they break a little bit. They go until you get a shaking of the tree. It happens here. It never happened. Here it just went and then went sideways and continued. But anyway, this is what's going on in the SPX. You go to the Qs, you go to the NASDAQ. Pretty similar, except for it's a little bit more extended, and these patterns have been very omnious, if that's a word. That's your support that it held. Here is your descending channel. Here's when it broke up above the level. Here's when it broke out above the prior high of the year, where hopefully that's when you did cover if you were a bear and short and trying to pick a top. And then maybe if you were looking to be long and you missed this spot, this was a good spot, and then here was another. And since then, we've been riding the 821-day, and yes, we're a little extended from the moving averages, but it doesn't mean you can't find things to do, and there's no reason just to be short out the kazoots. The Russell did reverse today, and it's been a weaker sector. Big deal. There's been lots of spots to navigate here. This was the descending channel, went to the upside. Here is your ascending channel that wound up going to the downside. There you are, channel surfing. You also had a break above, a retest before going, and then here is when it broke below, and then did hold here above the 200-day, and now it's pretty much failing near the 21-day. So this has been your weakest sector. But if you tried to do the same thing here and short, like just say the bios, when it bounced a third, because that would reject any kind of bullishness and set more weakness in, that happened right here. So hopefully in the bios, if you were looking to do the same thing, okay, it should never have really gone through here. It wound up, I'm sure, squeezing a lot of people out, squeezing the envelope all the way up through there before coming in. So you can't just blindly short bounces. You have to measure where the bounces come from. And these things are tradable. At least there are patterns here. This is when this lower level pattern ignited for a bounce to the upside. Here was your shot across the bow. Boom, small retracement to continue lower. This was that 222 measured move before bouncing up, and took bears a little bit further, which the Russell didn't. Anyway, as far as the financials, still hanging around, not as volatile. Lots of things to do this week in the financials. Not as much power today, but they've had some big moves. So if you go and start to look for some of the individual names, I guess we'll just do a roll call through to see where things are at as of today, not yesterday. Google, trying to hang in there. It's you had earnings, and it had a decent move after earnings, but that's also after a move all the way down from here and from here, and then when it got above here, and then, so you can't expect the stock to go nuts when you're in mid-July and not a lot of people around, and why put that much risk on? Yes, it's a little choppy, so just don't buy highs in the stock. And when you play momentum names, everyone likes to buy high and sell higher. Not happening right now, but it's still above the 8-day and still above the 21-day, and I guess here's your new trend. Try not to chase strength. As far as Netflix, I talked about actually shorting that. Yes, Red Dog said short something that was weaker. Okay, and this has been weaker. This broke right here. Then you had the failure at earnings at this 455, and then you had pretty much a break right there, and then it did give you another trade today when it went from up 3 or 4 through 425, and it touched 419. Which is around the 50-day. So not a full apart short, but it's something to do over the summer. Now we'll see if it stays below this 436. Facebook, yes. If you haven't heard, it did report earnings, and you do have a big gap up, but it's come a long way. At this point, there were some trades in there intraday, but it was very noisy, which is kind of what I thought it would be. You look way back when, you look at the pattern here. This has been an unbelievable pattern ever since this gap up. And ignited this move, ignited this trend that held lots of different times with lots of different trades along the way. This descending channel, I remember that. This gap up that held, that led to that. This head and shoulders top that led to a correction. This wishy-washiness, which people weren't sure whether or not it was going to break or hold, and what happened here. I remember there was like a Red Dog reversal somewhere in there, or maybe it just couldn't break below and came back above before igniting. And then after hours yesterday, it went above 72.50, and there was just no traction today. But look where it came from. So now, if you're investing in and you've been in it for a year and change, and you think it's going to 90, stay with it. If you're trading it, see how much or how long it digests above this gap, and see if it hangs there. If it doesn't, goes in the gap, chances are it's going to take more time. Last time you had some kind of exhaustion gap, where was that? That was somewhere back here. Okay, after a big move. It gapped up, didn't have much traction, and then it filled the gap, and that started a corrective period before rallying again. So where it is right here, I know everyone in the street upgraded the hell out of it, but you never know. Look where it just came from. So don't be in such a rush. If you look at the 5-minute today, it was a mess. It had some moves. I remember I took one trade. Okay, thank goodness. Right here, made some sense, right? Gapped up, came in, put in its tail, then got tight, and I bought right there, and I sold into that, and then I said, that's it. Thank goodness. Otherwise, it just came back in, and I would have given it all back. Now I'm flatted, and I'm going to wait. Twitter looks a little different, just because of how beaten up it's gotten. You look at where it is now. It's definitely a laggard. It's not trusted by the street. This is when it took off and had a great move, and then it's been in a downtrend ever since. Remember when we talked about buying it over 35, then it tested the moving average, and then today it kind of held in there. Closed near the highs. So some people, if they're short, they might be thinking maybe this is a quarter that they announced some kind of better user engagement and growth numbers. And from where it is, I know the valuation is still high. I think there's an opportunity here. The consensus hates it, so that makes me like it a little bit more. We'll see what happens if we could get through this 39.37. It'd be nice if it closed at 40 for option expiration, but I think that's asking a lot. LinkedIn is a funny stock, man. I'll tell you. I said today, I said, if you're long it from Sperling's play of the week right around 163, I would sell it into resistance, but it doesn't mean it's a short. As much as everyone had such pain trying to buy it here or in here, now it's going to go, and everyone that was trying to buy it in here is probably trying to short it up there. Don't be that guy. It still could hit the 200-day, which is right here, and it closed really strong today. So, you know me, 1, 2, 3, 4. On day 4, I'm not a buyer, I'm a seller, but it doesn't mean you have to be shorted. Look where it came from. It came from all the way up here. The stock, was a $250-some-odd stock, and it still has room to test a downtrend. And Facebook is at historic highs, so just be a bit careful. Yelp didn't do much today. I guess keep it on the radar for tomorrow. It's really a non-event. The one thing I did do well today is I did not buy Yelp on the highs. Tesla's getting kind of tight. I haven't traded this in a few days either, but it stares at me each day. Still not in play. Here is your last buyable pattern. Here is your last sellable pattern, and now it's getting tight here. So we'll see what happens in the next few sessions. Has earnings next week. Amazon came out after the close. Not exactly sure where it is, but they missed. They missed again, and their guidance is lower. And you still have to worry about whether or not, you need to buy it in the hole because they've given this a pass so many times except for last quarter. They have the phone and they are going to be the Walmart of the web, and I understand all those things, but the valuation's high, and sometimes it depends on what the market's feeling and whether or not it wants to give it a pass or not. When I came in here, if you look at the chart, I was thinking that could be a decent buying opportunity somewhere around the gap. And then I was trading it here through 340, caught a little bit of a trade. I'm not exactly sure where it is right now, but this was really your support. And then this was your bigger support. My situation is I come in here, I do the recap. I need to do it quick before my video guy goes, so I can't sit there and trade after hours and be that guy trading all day long, because just trading isn't my job. My job is to talk to you guys and explain strategies, be your offensive coordinator, and if you guys make more money with some of my plays and my ideas, God bless. I'm here to make a little money trading and wear a lot of hats and try and keep the ball moving. But I guess when I get out there, we'll see what happened with Amazon. This was a decent area to watch, but it wasn't the end-all be-all. If you look back at the chart, support, and then bigger one. So I wasn't going to just buy it there and walk away, because I don't do that after hours. BlackBerry woke up today. I actually caught it pretty early, made some money back in BlackBerry because I was caught in this right here when it came out that IBM and Apple was going to have a collaboration. I was riding this trend and it was going well for me. I got in something somewhere around here. Then on this day I had a decent amount of size, and then that happened. Get out of the way, said I'll wait to see what happens, went sideways, and then today, you had some chances. Small red dog reversal, then it did give you actually even some opportunity, in the below 10 range, as there was some news that, the CEO has been talking to people to try and get some kind of collaboration, and then it went. You look at the 5-minute chart and you'll see it did get tight. This is when the news came out, it ignited, was going back and forth, and held a decent amount of it, and then, you didn't have to be perfect. You could have bought it here and still made yourself a decent percentage. Now the question is, what's next? So I have a little bit overnight because it's still, if you look at where it came from, it still held support, right? It held this going sideways, and after a gap up after earnings, so maybe it just needed time. Some will say this is a head and shoulders pattern, left shoulder, head. This could be your right shoulder. We shall see. I don't think so, but you know what? Well, we'll take it from here. Solar City actually had a decent trade today for some guys. It's not leading the market, but it held this big wide range igniting bar pretty much, gave you a trade here, and then I guess another trade there. So that's doing fine. No other solar stocks are really doing as well that I've seen. FSLR is on the radar. Maybe it follows suit. Small little red dog reversal today, I guess. If we were to get above this, maybe that can go. I tried to, spread myself out a little bit in Walmart, and the CEO left, and this looked good as of yesterday. And then I just, I'm not thinking about being an investor in Walmart, so I got out of it today. It did look good if you come into here. Made some sense, right? Bull flag, maybe it continues. Didn't. Get out of the way. I'll wait for the next one. Target actually did do better. Gave you a day 2. I'm not in it either. I kind of just get out of these things. I'm like, why am I stretching myself out in things I don't trade that much, just trying to have long exposure? So this wound up being like a push for me. It was okay. Soda was interesting. Got gapped up, went. There was some talk that it could be going private. Then a lot of reports kind of said there's no possible way that could happen. So, a lot of people got caught buying the news quickly. So if that was you, be careful next time. What I did is at the end of the day, after it pulled back in from 34 down to 31.50, I just bought some 34, 35 options, I think, just in case someone does want to come in there in the next few weeks, because this has been around there for a while, and sometimes the talk becomes the truth. We'll see. So at least I'm not holding the stock. My risk will be premium paid just in case it's real. If it's not, I'll donate that to the market fund, which I do from time to time in options or things that I don't really believe in, but I want to be in just in case something good happens. Like Sperling. Sperling bought Z. He didn't know what was going to happen today. He liked the chart. There was some things out there, and look what happened today for him. He had a great day today. Thank Lady Luck, I guess, but that's when opportunity meets preparation. Stock came in, was a strong stock, started going sideways, was perking up. He was talking about it, then boom. So you didn't know that was coming out, but strong stock and a nice trend, buying a pullback. He got lucky. Good for him. What's good about that is, though, that we were in the only business, or there are a lot of businesses where you could have success, but the only business where you could be involved in something and it turns into a home run, and you could have your best day or best month or best year in a day because you're focusing on something that you get to know, you get to see the action, and then you get to see when something's weird and there's activity there, and you get to jump and pounce on it and execute. And that's why people love this business, because every day is different, every month is different, sometimes every hour is different. So if you're in the trenches and you're in front of your keyboard and you have an account and you know what to look for and things happen to show up in front of you, you get to pounce and potentially have a great day or a great month or a great year. And some other jobs, you can't do that. You get your salary, you get your days off, you get your sick days, and granted, having a guaranteed salary and benefits and all that kind of great stuff that usually doesn't come with a prop trading job or something in the market is nice, but that's why it's to each his own and the grass isn't greener. But I will say, coming into every day, there's opportunity if you're looking for it, and there's been a lot of opportunities if you've been looking for stock setups and not just looking for a top and getting caught in the noise of Twitter and the internet. If everyone out there is trying to be the smartest guy in the world and talk about every risk that there is in the market and why you shouldn't be in it, and they've been probably doing that for 3-4 years, or they've been doing it for 20-30 years. Bottom line is, over time, on a macro approach, chances are you're going to do well long term. And if you could come up with an intermediate active approach and you have a process with discipline and execution, you can make a living, and some people make a heck of a living. Hopefully you're making progress. It's Thursday. Enjoy yourself. It's the summertime. I'll see you tomorrow. I'll be trading in Short Hills. Have a great night.